Yeah, Christian Kadel is my name. I'm running the capital markets business of Colliers in Germany. For those of you who doesn't know us, we are a global company, global transaction and advisory company in the real estate sector. 15,000 people or a little bit more, 69 countries. And in Germany, we are about 400 people. The investment capital markets team I'm running, we are about 100. We did last year about 220 transactions and 5.5 billion. That's so much to me. I'm coming from Eastern Secured, where I worked before, and before at JLL. And I'm running the capital markets team since September, so I'm quite new there, September last year. Very exciting. We are very dynamically growing. Thanks so much.
Great, thank you. Thomas.
Yeah, good afternoon. I'm Thomas Kaechele, head of Germany of M&G International, or M&G Investments, the part of it, which is the fund and investment company of Prudential PLC, British Insurance. We run the office now for about 6 years in Germany. We have about 900 million asset under management in Germany. Worldwide, it is the real estate part is about 35 billion. The entire M&G International is about 350 billion total asset under management. And we are working for 2 funds at the moment. There's more to come for in entire Germany, ex-UK, which is important to mention in nowadays. And happy to be here.
Hey everybody, I'm Arnaud Malbos. I'm in charge of investment for Europe at Ivanhoé Cambridge. Ivanhoé is a real estate arm of Caisse de dépôt et placement du Québec, the pension fund of the French Canadian people. Ivanhoé is a $65 billion company. Globally, the allocation is 25% office, 25% retail, 15% resi, and you have 10% logistic and others. It's really a global investor. We are almost all the continents, even in real estate. We aim to double the size of the European allocation, so we are at 5 billion euro. We would like to be at 10 in the next years. For our exposure to Germany, currently it's slightly over 500 million euro through one shopping center in Berlin. We have a strategy with TPG on hostel A&O. Probably we'll develop that later. And we start to set up a team in Germany, and I'm currently trying to hire someone as a head of investment of Germany. So next year, probably, we'll have someone else.
Great, thank you.
Hello, my name is Melike Wirth. I'm working for die Developer Projektentwicklung GmbH. I'm a member of the executive board. We have been developing projects in Düsseldorf for over 10 years now. The developer is a subsidiary of Zech Group. Zech Group is one of the biggest project development companies in Germany, having about 8,000 employees all over. In different areas, not only real estate. We develop projects for national and international investors, always having a high demand on architecture and urban quality. Yes.
Hello, I'm Peter Mussaeus. I'm partner at PwC for energy law, so a bit of a stranger here. Thanks for inviting me as a lawyer who's not focusing on real estate totally. But we built up a practice in the last 16 years and have quite a lot of knowledge of energy regulation. And there are some topics which might be interesting for the real estate sector as well. And this is why I'm here happy to share these experiences with you.
Thomas, obviously you've got growth in some parts of Europe, particularly Eastern Europe, but last quarter flat in Germany. How do you see the sort of macroeconomic picture, and how is that influencing, I suppose, your view on the market and your investments?
Well, we try to be even more. Well, we are not a bullish investor in the market, so we always try to do a decent amount of deals, and we are always try, as the name says, we try to be prudent, and we always are. At least we think so. Therefore, I think the investment strategy is no matter, or the other way around. I don't see that the market in Germany will turn around as Marcus already said, within the next 12 to 18 months. And also on the long run, there is always a rationale for real estate, even if the interest goes up. Therefore, we stay exactly the way we stay at the moment. So we invest in core investments. We will broaden the investment platform a bit. Look, of course, for value also in other European states, because there is no doubt that there is higher yields further east from Germany, so in Poland, for example, but also here, not everything. More into, let's say, we look at the logistics sector, for example. No offices at the moment, because we think when you drive through Warsaw, there is definitely maybe an oversupply at the moment. So we are also here very prudent, and we see the market still as stable, and therefore we continue investing in Germany as well. So it's one of the anchor and the most important markets for M&G and for Prudential in the world, I have to say. So therefore, the focus is clearly on Europe, and here also on Germany still.
Okay, good. And Arnaud, just in terms of the sort of political risk, we've had discussions about political risk for the last 3 years solidly. Lots of things have come, and they don't seem to have had a significant impact on the market. How do you view Germany in that context when you're looking at let's say, France, UK, and other areas?
I think you are super lucky in Germany at this stage. For sure. I agree with you. Finally, the political risk, I think it's easy to see it, but if some of you are investors in UK, it's not so obvious to see that really great uncertainty is fundamentally changing. If you want to buy a core asset in London, it's not so easy. Let's say that it could change, but it's not so easy. So yes, I think. From our point of view, the real question is, I think you have election in 21. The question is, in terms of governance, you need to have people really running the country. And I don't know if it's accurate or not, but the question mark from let's say Paris is really Merkel and his coalition able to take the right decision at the right time, because probably we are, let's say, 10 years after the last crisis. So we need a strong governance in the big country in Europe for sure.
Okay, so there's concern over the departure of Merkel and whether or not that.
Yeah.
Okay. All right. Good. And Christiane, maybe coming to you, how are you seeing? You're obviously seeing a lot of different types of capital. I mean, Marcus there highlighted some of the different sorts of capital coming in and the kind of capital that's looking. What's your sense of that at the moment? Are you seeing new, different investors looking at the market now who maybe weren't there last year? What's the sort of change over the 12 months since we were at MIPIM last year?
If I look at the transaction volume last year, we had only about 40% of international capital. This was actually reduced to the year before. However, if we look at the big deals, so really deals over 200, 300 million, that's something where we see much more international capital looking at. And it's also interesting from which regions is the capital coming. So last year we had about 5 billion from in Germany, so the total market is about 60 billion. 5 billion came from the Americas, with about 4 billion of APAC, and about 14 billion of other EMEA countries. And so dominant was Germany, but there was also like a lot of interest from international capital. And the interesting thing is what changed. I could see that was the risk profile. The Asians were in the past very conservative. So for example, the Koreans, they just bought very long-term tenant covenants and nothing else. We also see a change there. So they go more into the risk curve up. We also see on the other side the US investors who were kind of like by nature more risk-friendly, so they were more on the opportunistic side. They went more into the core sector, funnily. So we think that they made up new capital sources. And another reason that they looked at this is also a very positive view on the occupational markets, more positive than most German or other investors. So if you see underwritings we see in transactions Berlin at the moment, they easily assume a 10 to 15% growth each year on rents. So this is really very aggressive underwriting. And so they also go into core product. And another point is like currency hedging, which helps them, of course, as the interest, as we saw from the presentation before, increased in the US. So they can use a positive currency hedge to increase their yields.
Okay, good. And maybe coming to you, Christiane, just in terms, I mean, there was a mention there from Natalie of investors beginning to look across, fly over London to get to Germany. Is your sense that you're already seeing that in terms of capital, and are you seeing more UK capital beginning to head towards Germany? Are you seeing is there a genuine Brexit boost for Germany?
Yeah, there is at least...
Just because it looks as though the deal's going to be voted down by the looks of it, so...
At least my understanding, I think the experts are sitting over there, but what I see is an increasing interest into Frankfurt as well, but I think if you speak to people from Frankfurt, it's still not as much as they expected a couple of years ago, when the Brexit vote happened. And there's a strong interest in Berlin, but we did discuss that beforehand, so I think you raised the question, is Berlin becoming as attractive as London or New York? So I think it's something which, we've been talking about with the Asian investors as well, so this is at least, it's really one of the points they're really interested in.
I'm going to come to you in a second because that picks up some of the points for you, Peter, I think. But first of all, just in terms of the development side of it, you would assume, given the fact that the economy is in solid condition, that it's not so easy to get building permits, that you would need to see an increase in development in order to maintain the status quo. What's the position at the moment? How's the development market?
The development market is, of course, facing two different sides. We have a very active transaction market, which makes it quite easy for us to develop projects. But on the other side, we are facing a situation where it's very difficult to get land to get to the projects. We are facing rising building costs. There is a higher risk for us. We still think that the market is quite stable, and as interest rates are staying at a level maybe for the next 1 or 2 years, and we think that we are going to face the stable multipliers in the coming years. We feel quite comfortable, but we are looking for opportunities, and we are not developing every project, buying a land for every price.
Looking at those soft factors that came up in the discussions this morning, so whether that's livability, wellness, sustainability, things that people weren't really talking so much about in investment terms. Is there a payback for investors? Is there becoming a payback for investors? What's driving the increased interest in these areas, Peter?
I'm looking at this point in a very specific way, which is the energy industry in Germany, and we have some trends which I would like just to summarize in a very, very short way. First of all, we have this, everybody knows, energy transmission in Germany. which is facing great difficulties because we still don't manage to transport the renewables to the places where actually electricity is being consumed, and this costs a lot of money. And so we have a trend of a decentralization of energy systems, which kind of is a good news for real estate companies because they are players for having a good relationship to many consumers, and they start to build up their own energy decentralized systems. The second thing is that our government is at the moment thinking of a higher regulation of the real estate industry in terms of CO2 emissions, to reduce the emissions. I think it's somehow in the DNA of Germans to regulate everything. And the good news could be for real estate companies, real estate managers, that it's more easy to make money, as I experienced from different companies who did so, to earn money with like energy systems when you have a very reliable system. And regulation is nothing else than quite a reliable system. Sorry, I hope you can understand me. And the third thing is that, let's say, the kind of ideologic approach of many like private people for residents. They like to have flats with like modern systems, with new energy systems, with like car sharing systems, and so on and so on. So we have a huge trend in Germany that when areas are being built, to start thinking about modern energy systems from the beginning, from the scratch, also often by the developers already. And there are lots of questions about how you set up this kind of energy system. And when you look at different companies and especially look at their first experiences, for example, Vonovia just has published its public relationship presentations a few days ago. You can see that 10% of the profit already comes from value-add services. So my answer would be, I think it pays back. Yes, it does. And I think there are a lot more initiatives to come when it comes to this different energy systems. One is, for example, that big housing companies offer their tenants already like energy supply contracts, which is a quite highly regulated, standardized commodity business in Germany. And so the company just earns by every contract which is being sold to the tenant, just as like a one little example how you can make money by this concept of earning out of the special relationship between the landlord and the tenant, and to make money out of like different instruments. You could go on with this thinking by insurance deals with craftsmen's works and so on and so on. So energy is, I think, just one of many which is thinkable, and where my experience is that companies are just starting to build up this kind of business, which interestingly, Susanna and me have been to Spain last week, and we spoke to some big companies, real estate companies in Spain. And though they do have a totally different energy market and also real estate market, they're also interested in these kind of topics. So I guess it might be interesting for more companies. Okay, you have a like flyer for this already.
If you want to know more how to make more money, you will find this flyer.
Excellent.
And
Very
this
good.
has been arranged before.
Good. And is that something you're having to, from the construction side, from the development side, having to take more into consideration? And is that being driven by the investors, or is that being driven by the occupiers?
As we are doing commercial buildings, not residential buildings, we are not looking that much into this topic. I think it's more services that are required by residential users, but the occupiers demand those services. And as for commercial buildings, we realized that there is a special demand for cleaning services and car sharing maybe, but the energy saving is much more driven by investors, by the transaction market.
Okay, good. One of the topics that's come up a lot as well over the past 6 months, for certain, longer in terms of the focus on alternatives, but for sure the move now in terms of strategies to a more value add, focus or a more, focus on some of these alternatives by institutional players seems to be becoming more of a trend. Is that something that you're seeing more of, Arnaud?
Unfortunately, yes, because it's fundamentally in Europe the strategy of Ivanhoé Cambridge for years, and yes, no surprise in the last years with compression of yield and more competition. Unfortunately, we have seen a lot of people coming on our ground. That's the cycle. No surprise. I think there is a clear form of. It's logical in a way that it's difficult to run a model in Europe today, considering much more yield compression. In some places, you can be lucky enough to have some rents, rental growth in front of you, but not always. So finally, if you want to make fly your model, and if you want to be able to absorb a part of potential shock in the next years, you have to look at things where you create value. So value add, opportunist strategy development are probably the place where you can do that easy. It's probably the easy game. After that, it's difficult because the land price have changed too. So on our side, we are really focused on the infrastructure. As you may know, as for example, in Paris, we have 68 new rail stations and 200 kilometers of new railway coming the next years. So we are clearly riding that wave because it will be a game changer. And in a certain way, we can fund that again in a sub-market where you know that surrounding change will create value on top of your own asset management work. So it's exactly what we are doing in Europe for years.
Okay, good. And Thomas, what's your sense of the sort of move towards, I mean, obviously we've seen union investment moving into student housing. What's your sense of the move? Is that being driven as a chase for higher yield? Is it buying into, I guess, a fundamental view that sector is going to increase, anything to do around living? What's your sense of it, and is M&G involved in it?
We're going to be involved in it. So yeah, of course, as I said, we broaden our investment platform as well. So alternatives, of course, value add is something that we look at as well. Coming back to the value add maybe first, this is something that is where we are, of course, rather late in the cycle when we see these kind of strange secondary cities where even institutional investors buy in meantime. So I think this is not sustainable. And if it goes more into a core market, then of course we are at the point where we used to buy cheap, work hard, sell it for a decent price. Meantime, we buy expensive, work hard to justify the expensive price, and then we sell for a rather moderate yield. So this is the new value add is basically the new core because of the chase of yield, because you get the 50, 60, maybe if you're lucky, basis points more after a lot of risk and after hard work. And resi is something that we look at it as well. So I call it resi light. So we look at it from a perspective more to go on a lease contract with an operator, if it is micro housing or micro living, if it is student housing. I think there is definitely a reason for that. Not everywhere. So also here, prudence is the main driver here also for us as well to look at it.
Okay, good. And Christiane, let's pick up on some of the other sectors. Let's drill down a little bit into those. What are you seeing in terms of the current market? Let's just pick up the main ones. So office, residential, logistics, retail. Just give us your kind of view on the main sectors.
Yeah, I think office is the most obvious focus of most investors. We have the largest transaction volume in offices, and of course this is carried by very well-running occupiers markets. We have the lowest vacancy rates for the past 20 years. It's picking up the rents, and if you see some of the markets where the rents are today and where they had been 30 years ago, you see that it was almost stagnant. So I think it makes a lot of sense to invest into this sector, also given like increased construction costs, which are at least double or maybe 300% more than 30 years ago. So that's the everybody's darling, I would say, and the most transactions happen in the office market. We see retail, of course, as the most damaged market at the moment. The most mispricing we see there. I believe there's a lot of good investments you can do in the retail sector, also very sustainable in the core sector. But also from the value-add point of view, that a lot of those out-of-town shopping centers, that you can do a lot there. And we saw this trend in the past, I would say, 3 to 4 years in the States, in the US, where a lot of like good investors went into this with value-add play and turned those centers. But of course not for the core investors, maybe the type of product. Very interesting is, apart from the normal logistics, I would say light industrial, which is kind of like a new sector we saw. I remember if I spoke to the Bears founder Bonewinkel 20 years ago and said, what are you doing with this stuff? I mean, who is buying it if you have kind of like managed it to core? He said, at the moment there's no market, there will be one. Yeah. So we see now it's a market in Germany almost more than 2.5 billion. So also in size, it's now interesting. It's interesting also for core or for institutional investors because it's a liquid market, and it has a great long-term perspective, because most of those schemes have a very low density. You can increase the density, the floor plate, the floor squarage on the sides. So interesting one. And hotels of course also something. The funny thing is we see so much new hotels, but in fact if you just compare the room numbers, it's almost the same like the past 10 years. It just changed to more the international chains from private operators. So all those sectors is interesting, and I see the same as Thomas said. The institutional investors have to think about different strategies, because they say, maybe office I bought for 4%, maybe I buy it for 3.5%, but why should I buy it for 3%? Because I destroy my portfolio yield with these kind of acquisitions. So they're rather looking than a new niche like the unions and so forth. And however, especially student housing, it's for me also a growth thing if you're in the right location. And why should this break up the sector? So I think a lot of interesting opportunities, and which also are sustainable even if there's a more downtown cycle we will see maybe in 2 or 3 years' time.
I noticed, Thomas, and I may have mistaken that to notice, but you gave a very tweetable look at the mention of light industrial. Your face suddenly went... So, why? What's your issue with light industrial?
Well, maybe I'm the loner here in this room, but light industrial is a clear statement of desperation, because the big boxes become more and more expensive. A lot of institutional investors that have to deliver returns at the end of the day cannot cope with this 4%, 4.25%. So they search for new asset classes to cover their allocation for industrial in their core funds, for example, like we have as well. So there's a certain allocation, and you have to of course buy then the assets to fulfill that. But at the end of the day, coming back to this asset class, you mentioned Beos. Beos is, I think, the only player who works with this Unternehmensgebäude, so as they call it, and not a light industrial, but the rest is something. When I look at other developers, it is on the long run, especially from an asset management perspective, there is always something. So there is too much office, not enough office. The clear height is okay, but there is too much columns, not enough columns. There's this, there's always something. So for a developer and for the first trade, it is definitely okay. It is very asset management intensive, so you always have to have somebody on the ground. And but on the long run, if you look at from an IRR perspective, there is vacancy. There comes a candidate that says you have 2,000 square meters of office and say, well, the warehouse is okay, but unfortunately I need only 500 square meters. Now you can decide, do I make the deal or do I let him go, but leave 1,500 square meters vacant? So what I want to say is there's always an issue. And therefore a big box is a clear thing. And it follows clear rules regarding shape, height, floor capacity, all these kind of things. And there is a certain demand for that, as we all make sure that logistics is here to stay. When we buy at Zalando, Amazon, and wherever. So it's the easier asset class, and for a good reason, it becomes more and more expensive. That's the downside.
And in terms of retail, does anybody have a positive view on retail? Oh no, yeah.
I'm not sure it's totally positive, but
we're
totally negative. Let's say that.
We're launching a new magazine called Living Retail at the ICSC. So that's. I'm hoping for somebody to say that's a good idea.
No, just to share with you, we had a really opposite experience in retail in Germany. My team has spent a few years to sell shopping center across Germany. It was not an easy play, easy game. Finally, when you organize a super structured tender offer, you don't receive really offers, but when you are off market, you receive offers. So it was really strange. But finally, we did it. But just to give some hope, we have currently a shopping center called Wilmersdorfer Arkaden in Berlin, and I understand from our asset management team that things are going well. We are able to put Decathlon on the first floor, so I think it's an interesting place because we are one of the very few pedestrian streets in Berlin. And in our recent exposure to retail, we entered a few years ago into the, let's say, resale vehicle of Hudson Bay Company when they purchased Kaufhof. And we are probably one of the last human to have done more than 15% IRR on a department store. For a North American company, it's not so bad. So there is some hope. But I agree generally what you said, that when everyone wants to escape a room, it's time to look at it.
Good. And in terms of the tax legal changes, there have been some changes, Christiane. So what are the key parts of that for investors if they're looking to invest?
We are expecting two major changes of the German tax laws to happen rather quickly. So the one is the change of the real estate transfer tax regime for share deals, and the thresholds will be changed. The whole system will be tightened. So the current thresholds for when real estate transfer tax is applicable is 59%, and this is going to be reduced most likely to 10%. And then also the monitoring period is going to be extended to 10 years. So no one really knows when these new laws will become applicable. And as a result of this, we see an increasing interest into asset deals. And the other thing, which I learned from my tax colleague, which we recommend when signing or agreeing on a share deal transaction, is to apply to structure the deal in a way that the current laws are still applicable, but agree on a withdrawal right, so that if the new laws become into force between signing and closing, both parties have the opportunity to resign from the deal. And the other thing which we're seeing right now, which Germany needs to work on in the next month, is the new new rules for the property tax. The Federal Constitutional Court has ruled last year that the current regime is unconstitutional because it's unfair, and the way the valuation of real estate is happening, and so the new laws need to come into force until the end of this year, because otherwise the cities are no longer able to impose property tax, and so we are expecting this in the next month.
Let's start just on a final kind of thing, which is if you boil it all down, which strategy, which location, which sectors do you think hold the most interesting opportunities going forward for investors? Let's start with you, Peter. You can, I suspect it may be related to energy, but we'll see. And then we'll work our way around.
Surprise, surprise, yes, energy. No, I think especially in the residential market, you're going to see lots of like new initiatives and value-add services, because it makes the stagnating real estate business a little bit more profitable.
Okay, good. Malika.
Well, for us on the development side, we have to say that maybe low-hanging fruits have been picked, so there has to be much more work for efficient and long-term profitable projects, but they still exist, and we have to dig deeper for good opportunities. Okay, good. Arnaud.
We are really keen to do things in Berlin. We know that the water of the swimming pool is pretty hot, but I think you don't have a lot of opportunity for a Western capital to build for 5 million inhabitants to which only 3.7 million inhabitants. You have embedded growth in that, and I think you look at London, Paris, it's impossible. So yes, we still believe in Berlin at 5, 10, 15 years, and in Germany, I think we would like to come back in logistic, probably not light industrial, but logistic we'll try. As we did with on P3 properties at a certain time. I think that's the main axis for us.
Great. Christiane.
Residential for sure.
Yeah, what I think is also that these type of services that are currently being provided in the residential market, that this is something which can also work for the commercial property market, and also combined with the latest developments in the green building area, so that landlords are increasingly looking to provide more services to their tenants when it comes to data, energy monitoring, energy management, and just to increase the consumer happiness in the end, and to improve the way the buildings are being managed, and that are being managed in a more sustainable way.
Okay, good. Thomas.
Yeah, what Malika said for the development part is basically true for the investment part as well. So you have to kiss a lot of frogs, and to find your opportunity. And this is what we do. Firstly, in knowing our markets, and secondly, of course, also in widening our investment strategy. As I said, a bit into alternatives, a bit into this value-add stuff. But this is our recipe for the future.
Christian.
Following Maike and Thomas' observations, so I think also it needs creativity, also from our side, from the advisor side, to find sites to develop, to find conversion schemes from maybe retail to office and the likes. So that will be driving the market to keep it at a similar level like today, because it's really dried out at the moment.